Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor. This is August 2, the second day of August 2016, and I'm really happy to be with you again. I like to always remind you of my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, and my partner, Chen Lin's letter, What is Chen Buying, What is Chen Selling? You can access both of those at miningstocks.com. miningstocks.com, or you can call our office here in New York at 718-457-1426, 718-457-1426. Thank each of you for listening to this show, making it one of the more popular shows on the Voice America Business Channel, and encourage you to continue sending along your questions, comments, praises, or criticisms to questionsfortaylor@gmail.com. questionsfortaylor@gmail.com. We do want to thank our sponsors for making this show economically viable. Our sponsors for this week's show, Trimetals Mining, Coral Gold Resources, New Legacy Gold Corp, Auryn Resources, Brazil Resources, and Columbus Gold. Well, I've titled today's show, Is the CIA Friend or Foe of ISIS? And William Engdahl will be with us to help answer that question. And then more to the point of where we should put our money right now, Eric Coffin and again Michael Oliver return this week as well. Behind the financial markets are unseen forces obscured from the headline news, that's for sure. Very little of what is really going on, I think, you're told about in the mainstream. Well, William Engdahl will help us uncover the pro-ISIS relationship. And for decades, the CIA has developed relationships with ISIS, which it has used as an ally against our enemies. And now ISIS is one of those institutions that's not so favorably looked at by most American people. Although the CIA, according to William, continues to use ISIS for some of its own purposes. Or, well, what actually happened? We want to ask William today about the failed coup in Turkey. What he has to say, I think, might be very surprising because it isn't necessarily what you're hearing in the mainstream news. What does that mean in the bigger overall scheme of things with respect to NATO on the one hand, Russia and China and India on the other? Well, gold has risen over 27% so far this year, and as a result, I'm enjoying some fantastic profits in my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks. miningstocks.com. You're going to go there. You also can pick up on a lot of the companies that I'm following. I have some news events from those companies that you can go and read about that are posted at miningstocks.com, and you can also subscribe there for as little as $69 a year. Well, not a year, for a 3-month period, actually. In just a few minutes, Eric Coffin will be joining me to talk about some of his favorite junior gold shares, and Eric is a competitor of mine. He's a friend of mine, a highly regarded friend, so I hope that you'll stick around and listen to what he has to say after our first commercial break. Well, from a fundamental point of view, all of what is transpiring economically and geopolitically seems to be very bullish for gold. But with the mining shares up dramatically in such a short period of time this year, for example, Silvercrest Mines, one of my biggest winners, is up over 1,300% so far this year. Many people are wondering if it's time to exit the gold shares and take some profits and get out of here and put their money under the pillow or someplace. Well, to help us answer that question, I'm really pleased to tell you that Michael Oliver is with me once again. Thanks for joining me again, Michael.
Good to be back, Jay.
Always good to hear from you. You have been so spot on with respect to gold, not only gold, but many other markets that I follow, almost all of them, in fact. You give me a sense of whether I'm on the right side of that market or not. Not necessarily whether I should buy or sell today or tomorrow, but just in giving me a sense of whether, I'm on the right side of that tectonic plate. So with gold up more than 27% this year, do you see, what are your thoughts now? I mean, is this a time to take some profits, or what are your thoughts about gold?
Well, normally when MSA, a momentum structural analysis, calls a major turn in a market with their top or bottom, we don't like to interfere with that trend or to suggest exiting the trend based upon counter-trend actions, unless we think the counter-trend action is going to be substantial enough to where it might be worth exiting. A recent example was we urged people to be long crude oil in the low 40s and told them to get out between 51 52, which is where it peaked. And the reason we said get out is we thought the correction would be deep enough, at least be 15%. In fact, it's been a bit more. In the case of gold, since it broke out at 1140 through 1160 price zone in early February, based on momentum metrics, not price chart stuff. We've not seen any situation that warranted exiting, because exiting could mean if you exit, you may not get back in, and I didn't see any dip that would be big enough of the 15-20% variety, and so far there haven't been. There's been a $100 pullback in gold at one point, but that's about an 8% drop. So that was a few months ago. I see it as still advancing. Right now we are challenging today. We traded as high as 1366 on the August contract. If you happen to close at 1365, that's a new high close for the entire move for the nearby contract. So it's challenging the high of a few weeks ago. So it's continuing to power ahead. Gold miners are vastly beating it, which is what we expected this year, vastly beating it. Well over 100% up on most of the major miners. Silver is beating gold. But still, gold is our barometer, and I still do not see any justification from our perspective to be fearful of a drop that's serious, lasting, or anything of the sort. In fact, right now, I think the greatest threat or benefit is if you hit $13.95 to $1,400, which is to say 20-some-odd dollars beyond the intraday high of a few weeks ago. I think they're going to gush it on the upside, another $100 rapidly.
Yeah, one of those whoosh
well, another whoosh effect. In other words, get up to where I do see pending layers of resistance that could, in fact, stall gold for a while. First major objective, and it's a broad zone between 1470 and 1540.
Wow.
So we pay attention to that each week in our reports as to what numbers and so forth. But that's what I see gold as right now. I don't see a threat. I see more likely a gusher on the upside. Helping that right now, by the way, is the euro. The euro has been firming. It did some good stuff last week. The dollar index broke some stuff last week that is some significance. And if the euro gains about another 2 cents, it's going to rush on the upside, and that will take the dollar index down hard. Remember, gold has done all this year without help from a weak dollar. If you add in a weak dollar into this, that could goose gold even more.
Yeah. That might be your whoosh.
That might be the whoosh effect, yes.
Yeah. Well, that's 1470 to 1540, so still a pretty good run here before we have to start. Yeah. All right. Well, okay, then, one of the things from a fundamental point of view that really helps gold mining companies are low energy prices. What are you seeing in oil these days?
Well, we thought we got a drop from the 51, 52 level, which we targeted before it ever got there. It stopped at 51.67, and we said, watch out, you're going to drop back at least 15% to 44 or in the low 40s. It actually traded below 40 today. We are not urging people to get back long oil until and unless we get an upside breakout, and we define that each week based on certain metrics that change each week. Right now, it's several dollars above you before it turns back up. I suspect oil will turn back up. We'll go back to that low 50s and go to about $60 by the end of the year. As far as that impacting miners, gold miners, as a cost factor, I'm not sure that's high enough level. Remember, they were accustomed to $90 oil, $100 oil.
Right.
So 60 as a potential spike point later in the year. Again, you got to look at these things over month by month as an average. These companies, I don't think, are going to be adversely hurt by, whether it's 40, 50, or 60. Now, if it gets to be 80, 90, that might be a factor again. But we're not looking for anything beyond about 60 by late in the year, once this correction that we're in now turns back up. So I don't think that the fundamental of high energy is going to impact the gold miners for a long time.
All right. With just a minute or so left here, Michael, the equity markets, the S&P 500, they seem to be levitated still. Earnings continue to get weaker, and yet the S&P 500 seems to make new highs from time to time. Nothing outstanding, as you point out. It's not like a runaway freight train or anything, but what are you seeing with the equities market? I know you've been bearish, and sooner or later I know you're going to be right here, but what are you seeing right now?
We measure S&P in different time scales. Annual momentum of the S&P is negative, outright, period, exclamation point, nothing more can be said. I then go to more intermediate trend factors, and in February we said in our report that watch out, if you're short, they're going to take your profits away, we're going back up again. I didn't necessarily expect a new high. We got a new high by about 2-3% above the 2015 high, which was 2130 something. By the way, today's low is 2140 something.
Mm-hmm.
So you look back over time and you keep seeing the same numbers.
Yeah.
The just below today's low, which is 2147 and change, if you close a week out down much below 2140, I think the selling could pick up. And you may, and if it drops another several percent beyond that, you could have seen the high of the high and be on your way back down. So I'm on an intermediate basis. We're still waiting with guns loaded, but not firing yet. I want to see a bit more rollover before I'm convinced that it's rolling back over again.
All right. Well, very good.
Go ahead.
There's going to be some money to be made on the downside eventually.
Oh,
here.
yes.
Yeah. Well, Michael, we're just about out of time. I want to tell our listeners it's OliverMSA.com, OliverMSA.com. Michael just really scratches the surface on this show once a week. We almost have to have him here, I feel. And when he's here, he gives you a few of the things that we look at most importantly for this show, but he covers a whole lot of other things, too. If you're interested in Apple, for example, he covers Apple. He covers almost, the currency markets, almost anything you can think of. And the issue is that he is, I don't know. I mean, it seems to me that he's so right most of the time. So in terms of helping me understand which side of the market I should be on, and not necessarily every little dip and turn, but to be assured that you're in the right side of the market, boy, there's nothing better in helping you sleep well at night than knowing that. So, Michael, thank you so much for being with us again, and we'll look to do it again hopefully next week.
Thank you, Jay.